So now we're going to talk about reversal patterns. And let's remember that these are much more rare than the continuation patterns. Markets trend. That's why we're here. This is Charles Dow 101. And again, you can show these charts to a third grader. They'll tell you if it's going up or down, right? So when we talk about pattern recognition, it's the same sort of philosophy. It's that same approach, right? Markets trend. So if you are looking for reversal patterns, if you're looking for head and shoulders patterns, you are by definition defeating the entire purpose of what we're doing here in the first place, trying to identify the direction of the primary trend. Now, I think it would be irresponsible of us to completely ignore these reversal patterns. I just want to reiterate that they're much more rare than the continuation patterns that we showed us before. Here we're looking at a head and shoulders top. This is probably the most popular pattern in technical analysis, but definitely one of the more rare patterns. So the way that it normally works, and I want to explain the psychology, first you need an underlying uptrend prior to this consolidation, and a new high in price, followed by a digestion, a fall in price, which is perfectly normal, and then the resumption of that uptrend, and then a new high above that prior peak, okay? Then prices come down and find support near that same level that it did prior to that last move higher. And then the bounce from that support level falls shy of the previous high and puts in a lower high right around the same area as the previous high that defined the left shoulder. So now we have a left shoulder, the higher high making the head, the lower high making the right shoulder, and then that support that's been found this entire time, that's what we call the neckline, right? Kind of like a human being. Two shoulders, a head, and the neckline. As soon as prices break below the neckline, that is an indication to us that the trend has now changed. What once was an uptrend is now by definition a downtrend. Lower highs and lower lows. Here we're going to look at an example of a head and shoulders top, one of the more memorable examples that I can think of. This is the Dow Jones Industrial Average. We're looking at a weekly line chart, okay? And this is the top in 2007, one of the most epic tops we've ever seen. Here is your left shoulder in the summer of 2007. Here's your head in the fall of that year. And then at the end of that year in early 2008, we have the right shoulder and a very well-defined neckline. As soon as that neckline was breached in early 2008, that was evidence that the uptrend that was in place prior has now changed, and we are now in a downtrend, by definition making lower highs and lower lows. Now I want you to notice something. Notice the kickback. We broke the neckline, confirming the end of this head and shoulders top, rallied all the way back that summer to the prior neckline, only to run into resistance, because that was support. Former support turns into resistance. We see it in patterns. We see it in normal trading on an intraday basis, longer term. But I think it's important to reiterate that when you get those kickbacks in those head and shoulders, those are opportunities to fade, not opportunities to be buying. Another great example of a head and shoulders top is Nike in 1996, 1997. So here we're looking at shares of Nike, price adjusted. We're looking at the left shoulder in late 1996, the head in early 1997, the right shoulder throughout the second half of 97, and the neckline right around 630. As soon as the uptrend completes this head and shoulders top and breaks the neckline, that's all she wrote. The uptrend is now over. We by definition have lower highs and lower lows. Notice once again that kickback, okay? We break the neckline. It's time to get short. You have one last opportunity to fade, sell into that resistance that was formerly support, and then you get the destruction of the stock. But you had plenty of opportunity to get out. Head and shoulders patterns are reversal patterns by nature. Okay, they're very rare, but we do find them. So just like we have head and shoulders tops, we also have head and shoulders bottoms. It looks very similar to the old Kilroy cartoon. It's a head and shoulders bottom. So the left shoulder, the head, and the right shoulder are going to reverse an ongoing downtrend. Let's look at an example. Here's your downtrend, your left shoulder, which provides that first low, that pivot low, that reaction high to create the beginning of that neckline. Once prices roll over and make a lower low, that is the head of the head and shoulders pattern, Kilroy's nose, then once we rally back, that resistance is that former resistance that we've already seen. Now that neckline is confirmed that that's the key level. So as usual, that form of resistance continues. There is clearly control by the overhead supply. The market rolls over once again to create the right shoulder, about equivalent in size as the left shoulder, right? Not quite as low as the head, right around the left shoulder. And then, of course, once we break out above that neckline, that means that the bottoming pattern is now complete. So let's take a look at an example. This is the S&P 500 at the low in 2002-2003, a very important low that marked the bottom of that bear market after the 2000 peak. So here is your downtrend. Here's your left shoulder in the summer of 2002. Here's your head in the fall of that year. Now you have your right shoulder in the first quarter of 2003. Then once we broke that neckline to the upside, all signs are clear. The downtrend is now over. We want to get long the S&P 500. These patterns that we see throughout the market, that we see trending, that we see confirming changes in trend, are in stocks, they're in ETF, commodities, currencies, but we can also see them in custom indexes. This is a group think. So I think a great example is a chart that I created where I took all 6 base metals, copper, zinc, aluminum, nickel, tin, and lead, equally weighted them to create my own personal base metals index. And even in something that is not actually traded itself, this is an index that I built, really does show you the shift in trend in the asset class, in this case, base metals. So we've had a downtrend in base metals going back years and years. Now look at the left shoulder in this index that I created in the summer of 2015. The ultimate low at the beginning of 2016, which is the head. The right shoulder in the summer of 2016. A very well-defined neckline that was confirmed to the upside, signaling the end of this downtrend and the beginning of a new uptrend.